Tesla reports earnings after the bell tomorrow.
And when I compare the 260,000 vehicles that Tesla produced globally to the 7,000, this is apples and oranges, but that GM sold, electric vehicles that GM sold in the U.S. in the June quarter.
Detroit's leading the world in electric vehicles. You changed the whole story, Mary, wherever you are. There you are. You did, Mary. You electrified the entire automobile industry. I'm serious. You led, and it matters.
It is such a wide gap. It makes me believe that this company will find its way to a much higher valuation. And again, not investment advice, but I think this is a $2,500 stock.
In this video, as Tesla stock moves higher, a Tesla bull with an incredible track record in prior predictions is expecting a massive earnings beat when Tesla announces their Q2 financial results tomorrow. And we are talking massively above Wall Street consensus expectations. And a stock analyst says Tesla is headed to $2,500 per share, more than a triple from where we are today. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. Today, Tesla stock was up a little over 2% leading into earnings, closing close to $750 per share. However, Tesla stock underperformed the broader markets. Nasdaq 100 today was up over 3%, Apple stock today up nearly 3%, Amazon stock today up nearly 4%, Alphabet stock up over 4%, Rivian stock bucking the trend down 0.25%, Lucid stock up over 2%, Nikola stock up 0.75%, and ARK's flagship ETF up over 4%. And this shouldn't come as a surprise to many of you, but full disclosure, I bought more Tesla stock today, picked up another 36 shares at $735 a pop, and still cannot for the life of me believe in late July 2022 that I'm able to pick up Tesla stock in the $700 range. I mean, seriously. Before we dive into the massive earnings beat prediction by a Tesla bull with an astonishingly good track record, let's hear what the mainstream finance media have to say leading into Tesla's Q2 earnings.
Tesla shares up just about 2% ahead of its earnings report tomorrow after the bell. The stock, though, down about 30% since the start of the year. Pras Subramanian is here with a look ahead to tomorrow's earnings. And Pras, we know that this is very important for the street. All eyes will be on Tesla because the stock has been under a pretty decent amount of pressure since the start of the year.
Yeah, this year, in the past 3 months, too, down around 30%, So, on the top line, we're sort of watching this revenue figure of $16.88 billion, down a couple percent from last year. And also the bottom line, adjusted EPS of 183. So these are these two metrics that we're watching right now for the Q2 earnings right now. But a lot of it's going to be looking ahead to what's happening in Q3 and the second half of the year. What's going to be their compound annual growth rate, the CAGR prediction for deliveries, and they've been sort of targeting the 50% CAGR growth rate. Are they going to reiterate that?
They sure will. In fact, allow me to quote exactly how this will be worded in the earnings report. We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% annual growth in vehicle deliveries.
Are they going to say, yes, we're going to hit that 1.4 to 1.5 million vehicles in 2022 after such a rough Q2 where shutdowns in China affected production, component supply shortage affected production? I think you guys talked about yesterday, Deutsche Bank's Emmanuel Rosner said that he expects them to actually reiterate that production goal, and also you should buy the stock here because of the fact that on short-term weakness. So a lot to look forward to here for Tesla going forward in Q3 and Q4 as opposed to Q2 right now.
There seemed to be a suggestion that the real concern was just the shutdown in Shanghai, but the two words that I can't get out of my head, cash furnace. That's what Elon called the other two factories, the one in Texas and Berlin that had no issues as far as any shutdowns. How big is that going to weigh on what we see?
I think that's a big component as to what we're going to watch in the call, in the report too, because of the fact that they did have a very good June. And does that mean that is it all China and Shanghai kind of going up, or is it actually ramp ups happening in Berlin and also Austin? So those are two big things to watch. Also, I'm watching new products. Elon mentioned that Cybertruck was going to be on track for 2024 production, or 2023 production, and also potentially a robo-taxi coming in 2024, a car with no steering wheel and no pedals. So a couple of things to look forward to beyond this,
way
this
down
year.
the road.
Robo-taxi. I don't know how I feel about that one.
Well, I for one certainly do know how I feel about a Tesla robotaxi. One, it's coming, and two, when it does, I think most Tesla stock investors will do likewise. I'm not going to explain that one. Let's move on.
Tesla reports earnings after the bell tomorrow, and the chart master says the electric automaker is sitting on a knife's edge heading into the report. So let's bring in Carter Worth of Worth Charting with the technical tale. Carter, take it away.
Well, that's right. I mean, you can feel the tension. It's the definition is a nice edge. It's sitting finely balanced between success and failure. We have this tight range. You see it annotated there on the screen. Every chart we're going to look at is the same chart over different time frames. So basically, if you take it back a little further, I would call this high volatility, low variance. We're not moving anywhere, but we're stuck with these wild gyrations of 20% between essentially 600 and 800. If you pull it back even further, you'll see basically where this debate or standoff is occurring. It's occurring under the trend line, having broken trend. So again, it's near perfect equilibrium, bears and bulls balanced evenly, and of course we know exactly what's going to resolve it, as is so often the case. The funny metals, they're going to say something in their earnings that people generally hate or like enough to move it substantially higher or lower. Highly unlikely that it stays range bound like this. Now, is it a coin toss? It's as close to that as you're going to get. We've put out reports saying that we think it's going to break to the downside, but I'll just tell you this, of some 2,000 respondents, both at the institutional level, the individual level, and on Twitter, it's running 60-40, that it will go down. 40% are saying no, it's going to get resolved up.
Really interesting stuff there. That is quite a tight range looking at those different time periods. Thanks, Carter. Guy, where do you stand on where Tesla's going to go from here? Are you in the 60 camp, the 40 camp?
I'm with Carter on this. Listen, last quarter, that April quarter was astonishing, and the stock traded up to, I think, 1,100, obviously only to sell off to low 600s, and here we are now. I think you're going to see a similar move. I think the stock probably bounces post-earnings, but you sell it again. And I don't think we've heard the last of former President Trump's rants about Elon Musk, and I think they're going to get more directed and may come more at him in terms of Tesla, the stock. So I think there are a lot of chapters left in this Tesla story, and I'm going to be having my popcorn on the sideline. But I think,
as a Tesla stock investor, it's definitely worth having an unlimited supply of popcorn available so you can enjoy the show. There's rarely a dull moment, and I think this is going to continue for years, if not decades to come.
Higher post-earnings, lower after, just like last quarter.
Gene, you're still with us. Gene Munster, I think that you believe that there is a long-term story here for the bulls, right? What do you make of Tesla?
Well, the first step is remove religious conversation. This is a religion, and I try to be judicious at not falling into thinking this is too good or too bad of a company. I just look at what I see as the facts. Facts are that the auto industry is a $2.5 trillion market, and that Tesla is one of the few companies that are leaders there, and they have outsized demand for their products. And I want to just quickly put some of the demand into perspective, is that in the June quarter, they reported 27% delivery growth, down from 67% in the March quarter. Disappointing deceleration. When you adjust for Shanghai, the growth would have been similar to what it was in March. It would have been 68%, so call it unchanged. The reason why growth is high, despite the fact that it's getting more expensive to buy a car, more expensive to take loans out on a car, is that people want their cars. And so I don't know if the stock is going to be up or down after they report.
Neither do I. Neither does anyone. However, I would like to know what you guys and girls think. Leave your guess in the comments below. After earnings, is Tesla stock up, down, or sideways?
But I do know that demand for their products outpaces their ability to produce them. And when I compare the 260,000 vehicles that Tesla produced globally to the 7,000, this is apples and oranges, but that GM sold, electric vehicles that GM sold in the US in the June quarter. it is such a wide gap. It makes me believe that this company will find its way to a much higher valuation. And just to finish the thought, where this ultimately goes, again, not investment advice, but I think this is a $2,500 stock over the next 5 years.
Interestingly, as I record this, my Tesla stock price target in the bear case 5 years from now, a little over $2,500 per share. And again, my bear case, 3% probability, extremely unlikely downside scenario where just about everything that can go wrong does go wrong, still in excess of $2,500 per share. So I do agree with Gene Munster, but I just want to add some additional context. Even if Tesla fucks up everything they can possibly fuck up, I still think Tesla stock's going to be in excess of $2,500 per share in 5 years' time. As always, my price target's available exclusively on Patreon. If you're not already a member, join with the card in the corner or the link at the pinned comment. And just on that note, I've opened submissions for the latest exclusive Q&A, so if you're already a member on Patreon, make sure you submit your questions because submissions won't be open too much longer.
I think that ultimately it's going to be more than just electric cars. I believe that their solar business is going to get moving. I also think that they can do other things, whether it's related to insurance or related to HVAC systems. I think the robot is a dream. That's not going to play into the model.
I find Gene's lack of faith disturbing. Actually, honestly, I don't think in the next 5 years, which is what he's referring to, the Tesla bot's really going to play into Tesla's valuation at all. However, I do want to emphasize the energy market, the automotive market, robo-taxis, all of these combined are an absolute speck when compared to the potential of Tesla's humanoid robot. And when I say a speck, I mean a speck, a fraction of a percent. And I know this sounds insane, but in 2069, I'm happy to revisit this prediction and we'll see how things panned out.
But no other car company has all of those optionality on the table. And I think that's what makes this company a unique investment opportunity.
This is an excellent point from Munster. In terms of the optionality built into Tesla, today some investors believe that Tesla is going to do pretty well in terms of EVs. Other investors, like this guy, not believes, but knows they have an unassailable lead and will absolutely dominate electric vehicles in the coming decades. In addition, some investors believe Tesla might do okay in terms of autonomy and robotaxis, and other investors, again, like this guy, knows Tesla has an unassailable lead in terms of autonomy and are going to absolutely dominate this winner-takes-all market. These two opportunities combined are worth many, many, many trillions of dollars of market cap. However, even these aren't fully priced into Tesla stock at this point in time. But then we have the options. I heard this described brilliantly by Gally over at Hyperchange. Shout out to Gally, hope you're doing well, my friend. Something along the lines of owning Tesla stock is really having a call option on Elon Musk's future creativity and ideas. Not only is Tesla going to absolutely dominate EVs and autonomy in the coming years and decades, but there's the potential for them to produce and supply batteries to other companies in the future. They've also got the energy storage products, solar products. They're scaling up their virtual power plants. Tesla, in effect, becoming a distributed utility, eventually the world's largest distributed utility, playing a huge role in the world's energy generation, storage, and supply. Then you've got other adjacent opportunities and markets. You've got the HVAC system, you've got the Tesla bot, and who knows what else Tesla will come up with. So going back to Gene's point about the optionality, this is really valid, and a lot of investors, I think, overlook this.
736, so 2,500 will be quite a run from here in 5 years, but we'll see if we can do it. We'll see you back tomorrow after the report. Tim, what's your take on Tesla? Gene says he's not going to make a call on whether the stock is up or down after the report, but you can get out your crystal ball.
Well, I'll speak to Tesla, the religion, and so in other words, the sentiment and the cult-like status, I believe, is what we're referencing here. Stock's significantly underperformed the higher beta part of the market that's rallied over the last couple of weeks, and even off of Memorial Day, you've actually had the Nasdaq outperforming the S&P by about 5%. Is that a change in character? Not necessarily. But for a stock, again, on the religion side that moved 160% on two events, essentially in calendar 2020, which were the S&P inclusion and were a stock split. What are those next moments? I look at the fundamentals. I look at a 60 PE. I just don't think stocks are trading at those premiums or will be. And I think there's still some ratcheting down of that to go. I also just look at competition in Asia from Hyundai, from Kia, from some of the big conglomerates in that part of the world where I do think EV continues to move forward. So this was always a competitive story. And right now, I actually think that the competition has closed the gap.
So according to Tim Seymour, who has referred to Tesla stock investors as Teslemmings, praised Gordon Johnson, yes, the class clown himself, for doing God's work in terms of informing the market about the truth about Tesla stock. The competition has finally come all over itself. You still short, Tim?
That was the story 2 years ago, and Tesla outperformed. But the religion is something to pay close attention to, because I think it's tough to get that kind of a following in this market.
So just want to ask a question. If Tesla is a religion, does that make these videos sermons? Maybe I should start my own church, and sort of protect and hide an army of child rapists. I don't know. What do you guys think? Let me know in the comments below. Should I do that? I guess I'll just sort of follow the Catholic Church's playbook. Become exempt from any taxes. Tell all my followers they need to donate 10% of their income, otherwise they're going to hell. And if any of you in my congregation suggest that anything inappropriate happened anywhere within my organization, I'll just tell you you're also going to hell, and also fuck you. Plus, give me more money. And moving on, it's time for a very bold prediction for a massive Tesla Q2 earnings beat from one of Tesla's most accurate and biggest bulls. I'm sure most of you folks are already following Troy Teslike on Twitter, but if you're not, one, you should, and two, here's what he's got to say, a bold prediction about a blowout for Tesla Q2 earnings. Given Troy's track record of nailing predictions in terms of Tesla deliveries and also earnings in the past, the fact that there's such a disparity between where Troy is and where consensus estimates are, even among Tesla bulls there's a big disparity, makes things very exciting. Either there's an error in Troy's model, or things could be very interesting for Tesla stock following their earnings report. Most people expect a drop in Tesla's gross margin in Q2, and to be honest, I am one of them. 2 new factories ramping up at the same time, plus supply chain challenges. However, there is a scenario in which Troy will be right, and that is, if Tesla's price increases are flowed through, perfectly aligned with price increases, costs, and so on, meaning that even though Tesla's overheads have gone up, their costs have increased, and they've got 2 new factories ramping slowly, which are going to drag on margins. Tesla's prioritization of delivering vehicles with higher trims, plus the full self-driving package, and the price increases all line up perfectly. It is possible that Tesla blows expectations out of the water. As Troy says, tomorrow will be interesting. So for non-GAAP EPS estimates, Troy's at $2.18, and consensus estimates from Wall Street for Tesla EPS, $1.77. This puts Troy about 25% higher than consensus estimates. That is a huge gap. Automotive gross margin, excluding regulatory credits, which was 30% in Q1. Troy's estimate, 31.1%. Consensus estimates, 26.2%. If you want to nerd it out, pause and have a look through every single one of these estimates, feel free. Troy's laying it all on the line here. You can see every number and assumption. Obviously, the big one here, gross margins. On the far right column, consensus at 26.2%, Troy at 31.1%, which not only will be a huge shock to the upside, but would actually be a sequential increase in gross automotive margins. And I want to take a quick moment to expand on this. If Tesla can show an increase in gross automotive margin between Q1 2022 and Q2 2022, I personally believe the stock market and Wall Street is going to flip the fuck out. Why? This really would be pulling a rabbit out of the hat. Wait, what's more extreme than a rabbit out of the hat? Maybe a hamster out of the butt? Something like that. Anyway, the point is, if Tesla can pull this off, it's going to be huge. Tesla had a forced factory shutdown. Shanghai, the whole feudal fascist COVID-0 shutdowns. Tesla factory shut for almost a month. Lost about 100,000 vehicles of production, meaning their overheads, their cost per vehicle much higher. That's going to drag margins down. Oh, and then there's the whole ramping 2 gigantic factories simultaneously on multiple continents in Europe and in the United States. Also a massive negative drag on margins. I will be surprised if Tesla can show growth in their automotive margins. I think it is going to be down, but I'm happy to be proven wrong. In fact, I hope I'm wrong. Actually, no, I hope I'm right, because I'm still buying Tesla stock, and if I'm wrong, not investment advice, just, So anyway, I guess time will tell. But as I said earlier, the fact that Troy's estimates in the past have been so accurate really makes this interesting. I think Troy sums it up here perfectly. Quote, automotive gross margin, excluding regulatory credits, was 30% in Q1. I expect it to increase to 31.1% in Q2, despite Giga Shanghai shutdowns and 2 new factories. Analysts expect it to drop to 26.2%. We will find out tomorrow. Excitement is guaranteed, one way or another. Couldn't have said it better myself. So I hope you guys and girls have enjoyed the video. I cannot wait for Tesla earnings tomorrow. Either way, it's going to be very interesting. And as always, I'll be live streaming the earnings call, so come say hi in the chat. Part of me is hoping Tesla absolutely crushes estimates, but the part of me that's still buying Tesla stock with every spare cent really hopes they actually come even lower than the Wall Street consensus. Of course, hope is not a strategy, so we'll just have to wait and see what happens. And lastly, don't forget to join Patreon with the card in the corner or the link at the pinned comment. Don't forget to get your submissions in for the latest exclusive Q&A. I'll see you guys in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.